Welcome, welcome. How's everybody doing? Nice, love to hear it. That's all that matters. $1 more than yesterday, and we're happy. How's everybody else doing? Good day. It was a pretty fun one. A couple things to do today, that's for sure. Welcome, welcome, everybody. How we doing? Everybody have a good day today. Hopefully you had some fun. Been a fun couple of days if you were trading it, right? Should I'm excited for tomorrow. CPI data. Should be pretty important. I don't know if we'll get a move like we did today or anything. We're up a long way off the close yesterday, like that. Another $9 day for us. That's wild. I'll give it a few more minutes for people to show up. I know it's been kind of tricky. We got a lot of the mastermind people are elsewhere, and I actually did a lecture in there this afternoon. And they got another one starting in a half hour. So I know that our attendances have been a little bit lower. But today should be a fun class. Day on scalping. Uh, We're going to talk about a day where it worked really good, a day where it didn't work quite as good, and a day where we wish we would have held rather than scalped, you know? Unfortunately, they've been all very recent, so hopefully they should be fresh in everybody's minds. Getting a couple of things. What a fun market lately, huh? It's been uh it's been a good time. Look at those moves, man. If you're on the right side of this market, you can like take the next month off. I mean, I wasn't that on the right side, but man, a lot of fun. It's also been fun that like everything that you could ever want to trade has been tradable lately, you know? Like even the slow movers aren't moving that slow. So if you're one of those people that doesn't like trading SPY, QQQ, Nvidia, the wild ones, even those slow movers are putting in some epic moves. I mean, Tilio got my eyes on Pfizer this morning, and I was just like filled with regret all day on that thing. I mean, this was such a nice move for something like Pfizer. Just that wick off those lows to then rally at like 90 cents. Contracts pay so good on something like that. Even the trend break retest, good ones. Yeah, Starbucks was a beast. That was one that, and somebody asked me about it, and I mean, I basically just said that like I don't like I can't form an opinion on it because I don't know enough about it, you know. But apparently, the market is pretty happy with that choice. I thought it was like that's just a super wild move. I mean, you can even see down here, like somebody asked me about Starbucks recently, and I basically just said like I don't want to be long, This was one of those ones where, dude, I just got like I was epically wrong on that, the 20 buck rip on that thing. Who could have seen that coming? And then intraday, like it really didn't slow down much, You had multiple dip buying opportunities on this thing, all very reasonable. A lot of the time when it makes a move like that, you know, if it just continues, you're just chasing it all day. But this one actually gave some opportunity to even get in there. I, of course, didn't. By the time I had just heard, like I had seen that Starbucks gapped, I didn't even pay attention to how much it was. And then I had heard enough people say, oh, Starbucks is insane today. And by the time I looked at it, it was like right here. And I was like, well, I can't buy it when it was trading at $77 yesterday. But yeah, yeah. Slow movers putting in moves. Even Disney's one that like I know everybody loves to hate, but like this has been doing like there's something going on with Disney. Like I think that we're finally gonna get like a nice move out of it here pretty soon. I'm sure hoping upside. I took a little bet on it upside, but we'll see. But Disney's got my eye right now. I like that. Breaking the little minor trend. Okay, well with that, drink of water. Okay. Welcome everybody. How we doing? Dirty River, happy to have you. We're going to be talking a little bit of scalping tonight. JR, how we doing? It's been 30 minutes. Good to have you back. So we're going to be talking a little bit of scalping tonight. Uh, it's something I really like to do. Is it a necessary part in the market? No. Will you frequently find yourself being sad that you didn't hold longer or you held too long? I mean, scalps are a thing that oh, there we go, daily bias. Yep, we're going to talk that. It's funny that lecture I just did, we talked a little bit about forming a daily bias, and they're going to get the double dose, the people who are joining me for round two. So we're going to talk about scalping today. It's something that I like to do. I think it's really fun. It pays very quickly or you stop out very quickly. So if you're one of the main struggles, one of the things that, I try to help people with a lot, is stopping out. People have a serious issue with not clicking the sell button when they're red, because you got it. People hate to cut a loss. If you are deciding that you want to scalp, then you need to button that up really quick because a scalp can go against you quickly. And I'm going to try to use some examples today, where we're going to be looking at the charts, but we're also going to be looking at some of the option contracts to see how they perform, to see, what type of loss you did have to observe, things like that. And, how do I scalp and what are things that I look for? Because, I'll frequently talk about them, whether it's like in my tab or it's in or, just on trade floor or whatever it is. And my trades are generally quick, because that's how I like them to be. I've been working with another buddy, and I was telling him the other day, part of being a good trader is not doing anything 90% of the time. And somebody just brought this up again, and I remembered it, and so I wanted to mention it. Just sit and do nothing and wait for the trades to come to you. Scalping doesn't mean, I see people like, oh, I in and out of every candle. And like, I mean, you can if you're good at it, but really, I'm just looking for a quick little move, I want 10, 15, 20% in a candle, and I want to say I'm wrong on the very next candle. And so that's what scalping really means to me. And I know that, I do things different than a lot of people, especially a lot of scalpers, and it's just not to say what other scalpers do, but it doesn't work for me. Those people who are on their like 1 minutes and their 2 minute charts and stuff, I just can't do that. And they're looking at all these like intraday supports and like taking 30 trades a day. And that's not my kind of scalping. I like to identify some, good levels, some levels that I care about, mostly daily time frame. Today we're going to look at some shorter time frame ones as well, hourly and 4 hour things like that. Maybe we'll see. And then I like a couple EMAs on there, and I like to just keep it really simple, let the trades come to me and trade the same statistics that I teach all of you. Most breakouts are going to fail. So man, we buy up to resistance, short it. Most breakdowns are going to fail. If they're selling us down to support, then short it, And so I'm going to go through what I'm going to try to go through is basically three charts. And like I said, one day is going to be a day that scalping worked pretty good. One day is going to be a day that scalping worked absolutely great. And one day is going to be a day where, it's going to be today. So, scalping was fine, but were you better off just holding all day? Likely. There was plenty of scalp entries, but we're going to start with the day that wasn't quite as good. But before we do anything, with all of my trading, we always, always, always start on these daily time frames. To me, they're the most important things. For anybody who's just in my last lecture, you're going to get the quick rundown again. And then for anybody who doesn't know how I find support and resistance, I look for major reaction points. I want where big rejections happened. I want where big bounces happen. I want where consolidation happened and ultimately leads to a big breakout. I want where a sell off stops, these lows down here, and then ultimately pushes up. That's what I'm looking for. And then on the other side, any sort of big rejection here. You know, just I want these big, important, major levels. Even another one that I saw when I was doing my last class, 547, that's going to be crucial, And then I want all of these major levels. And then I want to look for places where, maybe we took big bounces, maybe we took big rejections. Something like this. Obviously, the gap is filled, but it was halfway filled the next day. So maybe I'll take note of something like that, nice, simple cut and dry levels. Then the next thing I want to do is, and this is for daily bias person, I want to take note of any trends. And we're going to do, I'm going to point out multiple things today. Here is one trend that obviously we're breaking above. Here's the more major trend. So to me, it's the one I care about. We have a high here, we have a lower high here. Obviously a trend. The next trend that I want to talk about, and it's one that a ton of people have been talking about, and is this trend. And no secret to anybody. I'm definitely more bullish than bearish, but the other thing that there is no secret is that I don't like named patterns. And we're seeing a really, really wonderful example of what I always try to preach to people, especially on short time frames, 5 minutes and stuff like that. Most patterns fail, like at least once you're going to get a failure on those things. And so everybody has been watching this chart, calling it a rising wedge, calling it a bear flag, calling it whatever it is, and it's not. And officially after today, it's not. The pattern failed. So now the pattern has failed. Can we still break this trend and go down? Absolutely. But for now, the rising wedge and bear crowd people are officially wrong, you know? And so this is a prime example why I trade trends. And maybe I take note of that trend that I just deleted. You know, I'm not saying this trend is wrong. I'm saying calling it a bear flag or a rising wedge is wrong because it is neither of those until it happens. So you need a breakdown of your lower trend to confirm that this is a bear flag or that this is a rising wedge. You need that trend to break. Until that happens, until that happens, it is an uptrend. And in this trend's case, it's an extremely strong uptrend. You know, this thing is absolutely rallying. So we have an extremely strong uptrend that hasn't broke trend. So, you know, today we got to see it. I mean, for the last, like, you know, they had a good day, but for the last, you know, week, the Bears have just been getting obliterated. You know, unfortunately, they've been smoked. If you've been on the Bears side, obviously you could have caught one nice day, but for the most part, Bears have been getting torched. So now we still think of this as an uptrend, and we start to use that to form our daily bias. We say, hey, you know, trend is strong up. I want to buy dips today. And, you know, that doesn't mean buy every single dip, but we just want to look at this and say, you know, hey, trend is strong up. You know, technically speaking, for the last, you know, month, less than a whole month, we have a downtrend going. But if you really zoom out, this is a monster. Like this is a monster uptrend. You know, this is a substantial correction. You know, 10% or whatever. We did more than that. You know, we did a very nice pullback in the downtrend or the uptrend. But no matter how you add it up, like look at this chart, man. This thing is an uptrend. You know, so we always want to use that to our favor. And we say, you know, when buyers start showing up, of course, they start showing up. So we have strong uptrend. We're breaking through our daily levels. We know that we're pushing to this closer trend, but we can feel comfortable as long as we keep reclaiming levels. We can feel relatively comfortable to buy dips as long as we are close to those levels and staying above them. And so this is what we have on the charts. You know, these are the levels we have. None of these, all of these come from previous. You know, we have this one up here, it hasn't come into play yet, but all of these levels come from back here on the chart. That's always how I teach it. And these are the levels that I mostly use for scalping. And that's where I differ from a lot of people. You know, a lot of people, they're looking for those, you know, hourly levels, 15-minute levels, and that's what they're trading all day, every day. I have much more confidence in using my daily levels for entries. And you're going to see here in a minute, I'll use the hourly levels and things like that for more of targets, but I want to be using my daily levels to build my actual bias. And so that's what we're going to look into now. You know, we've analyzed this daily chart. I mean, if you want, and I always think you should, I like to recommend them. Always check out where any major SMAs are. And we're trading right around them. And I didn't mark this one because I knew that I had a level within like 30 cents of it or whatever. And so that's the only reason I didn't mark it, but you should take note of that. Just like you should take note of this here, the 50 SMA that's, you know, above the 20 right now, is sitting up here about 543. You want to start to be careful with your longs up there, obviously. But we've established, you know, strong buying, strong uptrend, good data we should rally on. You know, we want to be looking into buying dips. And then since we're going to go back a couple more days and we move so big, we're going to put, you know, again, big rejection levels, stuff that matters to us. You know, we don't care about all these levels in here. Can you use them for trading? Sure. But we care about where big things happened. You know, like we put in a triple top and we dumped $30. I want to take note of where that triple top occurred in case we come back to it, you know? And so now we have our levels, but you have to be realistic. And especially as a scalper, you're not a scalper if you're constantly beating yourself up saying that you didn't hold trades long enough, you know? And so you, as a scalper, you don't enter calls at 518 with the plan to sell them at 524. But you do plan to enter calls as close to 518.47 as you can, you know, because we know historically it's worked. We've ripped off of this. So we want to look into that. But as a scalper, we aren't looking for a $6 move, and nobody should be looking for a $6 move intraday, generally speaking. Will they happen once in a blue moon? Yes, and especially potentially more and more as SPY gets more expensive, but you want to keep your targets realistic. So you can see here, we got $6 between those, we got $7 between those, we got another $6. We have a lot of space, Lambas, I love yours so funny. It does. It happens daily right now. I mean, I can't deny that. But real world, this isn't normal. So we know we need some additional levels. So that is when I go to something like the hourly time frame. And I'm going to zoom out hourly time frame. We need to go back in time enough that we can view the chart, know where we're going to be trading here. And so we want to go back in time and we want to look at the last time we were trading here, and we want to look for any sort of levels or information, highs like this. And we don't see the after hours on a daily chart. So that's why I like to pull them up on the hourly or the 4-hour, because we can look at some of that after hours movement. Something right here. We didn't see this on the daily chart, but that's a really nice double bottom right there, a level that we should likely have our eyes on. Right down here, nice little double top with a rejection for us. And then over here, to me, I'm always interested in big consolidation that breaks down and sells off. So now we got a few more levels. And the final one that we're going to put on there, because as scalpers, and all people should care, but especially as scalpers, whole numbers scare us. 520, 521, those whole numbers are scary, especially things like 520 and 525 when you're going into them. And then now we got some levels, and we got some levels. I'm even going to add this one here. We got some levels in the areas where we're trading. So now we go to the 5-minute chart. And what we're going to do is we're just going to look back in time at our levels. And we're going to discuss how these days were. So, and like I said, we're going to go through 3 days. Now we've got our levels, we've identified all of that. I'm going to put on a couple of studies, but I'm going to keep it really simple because you don't need much when you're scalping. So we have our daily bias that, we've started buying dips. People are buying dips and dips seem to get bought. Overall trend is mega up, of course down recently, but maybe we're feeling a little bullish because we know that was a pretty big sell on some news or whatever. So we got to get rid of those ones, huh? So all I'm putting on here, 9 EMA, 20 EMA. A lot of people use the 21. I use the 20. No big deal. They're basically the same. 9 EMA, blue line, 20 EMA, orange line. Purple line is VWAP. All things that I use in my trading most every single day. I don't think they're make or break for traders, but they do a very good job at, identifying trends, identifying potential places to pull back. And so that's what I want to make sure I'm on. So here we go. That's what I want to watch. And now we get to look at our charts and we get to ask ourselves as traders, where do we think we can have a really high probability move from a bounce or a rejection to something on our charts? So these are going to be kind of like, if anybody has joined them, these are going to be kind of, no, the EMAs, I see that question. This is the 9, this is the 20. That's it. I wouldn't run a 12 because you don't need it. A lot of people will run the 50 on the other side as like, if you're breaking the 50, you're likely getting a reversal of trend, but the 9 and the 20 for day traders and scalpers, perfectly volatile enough to give you some crossovers, things like that. And so now we're going to go through, if anybody's seen them in my price action lectures, we're going to go through these charts and, we're hindsight trading. I always give this disclaimer. We're hindsight trading. We get to pretend like we're the best traders ever. During market hours, this kind of stuff might not seem good to you, and maybe you don't take the trade and maybe how the candles develop you don't like, but I'm going to show you how I treat it. And so right off the open, obviously, and so well, I know my levels. So we have a daily level here, a couple hourly levels overhead. So nice daily level here. We know I already have my bias saying, hey, they're buying dips. We're above trend. Buyers are around, blah, blah, blah. So my daily bias is kind of I did forget one thing. My bad. So the only other one that you want to add is this multi-time frame EMA. because this goes into my daily bias as well. And I run the hourly 20, it's this yellow line. I run the hourly 20 on a 5-minute chart. So here's our daily level. We have sold down to it, been bought back up over it, and held it once. So this is my first scalp of the day. No questions asked. I'm buying this dip right here. And why am I buying this dip? Because we've held the level. This one failed it, held it, held it. Two's enough for me to say, okay, we're going to hold it. And now the multi-time frame EMA is a custom script. I have it pinned in my tab. If you can't find it, shoot me a DM and I'll get it to you. It's a wonderful tool. So multi-time frame EMA, got to have that. We've sold down, we've held my level, and then everybody knows that I like to teach stop losses different than a lot of people do. I like to teach that you have two stop losses. You have your perceived stop, and so on this trade, our perceived stop is a close under 529. That's it. We don't know how much we're going to risk. We're hoping it's going to be 20 cents, we're 20 cents, 30 cents, whatever these ones are. We're hoping it's going to be that. Our hard stop, where we say, that stop is set, I will lose no more money. This low, the low of the after hours, is going to be it. So we know that we're basically risking about $1 of downside. Our entry is here. We have a very, very close, realistic target. We have VWAP, we have EMAs, we have hourly 20, and we have 530, all right here. So this trade is a tricky one. It's a scalp. It's 1-to-1 risk reward at worst. At best, it's going to be, 1 to 3 risk reward. We're risking about 20 cents, looking for 30 cents, looking for about $1 up. So we're just over 1 to 3 risk reward on this trade. However, it's a scalp. So we need to respect those levels. We need to respect that stop. Well, what about on the upside? When you are scalping and you catch a volatile move like this, you are basically out. You ratchet up that stop right on it. And we know we have this overhead right here. We want to assume we're going to reject it. Obviously, like one candle later, we don't. But you catch a $1 move on $1.50 move on SPY, you are out. If you're a scalper, you're out. You got your money. You know that even 2 candles later, you need to get up to here to be what you're worth here due to the volatility. So you scalp out of it. And now you look for another entry. And what do we look for in another entry? Our levels. You aren't just buying candles because they're flying. I hear people in VC say, I'm a scalper, and they're getting in mid candle of a rip and, of a rip or a dip, and then they get smoked on the very next candle. So what do? We trade our levels. We trade our support and resistance. And when I see this one reject, I'm going to be watching because we closed under this level. To me, we have, and I don't know how all of this went down in the market. To me, we have no interest in being in right here. And then ultimately we missed the short move down. Well, now we're right back to our levels where we wanted to be. We're holding, we closed slightly below the EMA. Again, we closed slightly above the EMA, holding VWAP, holding hourly 20. If we're above hourly 20 in VWAP, I'm buying dips. So we've seen a couple rejections. I'm taking an entry on the close of this candle, somewhere right around here. And why am I taking that entry? Because I'll have a hard stop right down here. I'm risking 30 or 40 cents. If we're going to go below the hourly 20 and sell, then I likely don't even want to hold because it could get really ugly like these ones did. Stop you out maybe too early. But right here, you're looking for an entry. You're holding hourly 20, you're holding VWAP, you're holding 20 EMA for multiple candles in a row after a sell-off. So you take your entry here with the very tight stop. And again, at the very most, you're looking for this level. So likely you trim here because again, you got basically $1 move. Likely you trim here and you are out of the position because you are trading from, it's not support, but the EMAs, the hourly 20, the VWAP, those are all just support with a fancy name. That's all they are, They're support and resistance that move around throughout the day. So you take it to the level. We break above it and we get a nice push, but we know once we're above this level, that's where we want to look to buy dips to this level for a scalp. That's it. We want to look for a scalp. But we have to be cautious of right over here. This was a high that failed that technically we didn't really push above. So we get the breakout, close under, get another breakout, get an ugly candle on the top, get a candle that doesn't really tell us to buy. I mean, we aren't even above the midpoint of the candle. It's mostly a sell candle. Another no buy. Finally, a candle that says maybe buy, like, but still not a strong enough candle. And then ultimately you get smoked, If you did buy this candle, there's at least a chance that I would have bought this dip to the 9 EMA, hoping a hammer was going to print. But I would look to take profits here, I mean, 30 cents above you, it's not going to be much. It's going to be 10%. It's a scalp. And then you move that stop above entry, and there's like a 99% chance on this trade. If I took this trade, I made no money. Or, I made $1 or $2 a contract because I got a little pop. I would have ratcheted up my stop, and it looks like this thing just instantly reversed and smoked you. So now we're back under this level. EMAs are starting to go sideways. We know that we can start to expect ranged movement. So we start watching just candles forming. This one closes above, no entry, closes way below, no entry. Kind of dojis with like 20 cents of upside, really no entry. Closes right below the level, no entry. Closes way too ugly of a candle to take an entry here. I mean, this one, like, nobody won. That's the issue with the doji. No side one. I mean, yes, this candle is technically green. No side one. Right here, break the level and absolutely flush. Well, we missed the short. That's the way scalping goes. We watch a bunch of candles form to hopefully get one trade. 90% of scalping is doing nothing. Well, now we come down to here and we start to see candles that interest us where we're selling off, but there's buyers and there's some more buyers and there's some more buyers and there's some more buyers. And then this one, the little psych out, but basically holding lows. We're still below this hourly 20. We're not in longs. We're not in longs. However, big buying, increase in volume, holding hourly 20 in the end, breaking VWAP, breaking 9 EMA, almost breaking 20 EMA. We're dip buyers at this point. First dip down into that 9 EMA. I'm looking to scalp into this right here. And then I'm not looking for much. I'm looking for close to this level. Maybe this wick, maybe these, somewhere this wick, up close to this level. We get this nice pop up, and maybe I don't sell. This candle pulls back. This candle I'm selling because I have a rule when I'm scalping. I will not let the market go against me twice on the same trade. And that saves me a lot of heartache because, market pushed. I made money here. If I didn't sell, I'm red here, because we had the volatile push up and now we had a volatile sell down. That's going to hurt. That's going to hurt my contract value. So I'm red here. So on this next pop, I'm trimming my contracts right here, likely all the way out of the position because I don't want another one of these. I'm scalping. I'm not looking for a breakout. So I'm taking my 15% or whatever this pays me, and at the very least, tightening up the stop where that next candle stops me out. Then again, we take a bounce. We're not in the trade. We're scalpers. We don't care. This isn't an entry for us. This is because it's buy things we want to enter on. This isn't. It started pushing. It started pushing up to our level. Now we start to wonder, is the market going to push? Because they've bought us strong. We've seen increase in volume. The decrease in volume was consolidation. And we're now seeing a little tick up in volume. So we break above our level, strong break above the level, and we get a pullback. So we buy this pullback. We know that our stop is going to be tight. I mean, worst case scenario, we're risking 40 cents a downside against us. And that's going to put us well below these EMAs. So even less than that, we're risking a little bit of downside here. You buy this pullback right here. As a scalper, you are taking your first trim right here. You get it in the next contract. You are all out, likely with a limit order sitting and waiting right here. Do you miss some more of the move? Does it track perfectly to your target? Yes. But when you're scalping, you aren't looking for that. You're looking for a very volatile move that's maybe one, two, three candles. That's all you want. And this move is going to pay you huge on a contract on a nice little same day, getting a $1.50 rip. That move is going to pay you huge. And then, well, okay, so this one's funny. This one likely, well, I guess we got 535 up there would have been my only argument for it. I think this is an hourly level. I'm forgetting now. But this one, I got to be honest. I would have seen this big breakout, big buying, and I might have been a dip buyer right here. I would have been looking for the consolidation and hold, and then I would have had my stop basically right here. I would have had my hard stop because I knew, this low of this candle, basically the midpoint of this candle. I knew that I was buying at the top of a breakout. And so I would have got stopped out right here for sure. That like this is likely a trade I would have at least attempted. And then I would have got stopped out here. No big deal. That's scalping, but you have to respect it. We've stacked up 4 or 5 20% trades, and now we've like 10 to 20% trades, and now we've probably taken a 10 to 20% loss. So we've just wiped one of those off. With scalping, you have to respect those stop losses. Even if you wait for the candle to bounce back up, when you get the bounce back up, then you are out of the trade. You aren't looking for the reversal. You aren't looking for the 9 EMA bounce. You're admitting defeat and cutting your loss for a smaller loss if you can. But for me, we can see it right here. We had that increasing seller volume. I wouldn't have known it until I was in there and the sellers won. They likely even bounced it and then sold it. So I would have taken the stop out there. Then we continue watching the market. 9 EMA bounce failed. 20 EMA bounce has us in way too tight of a range with the 9 EMA to care about it. But then now we're selling down to our level. So we start watching the market again. And I like to think I would have bought this one as the risky bounce, but that might have been too lucky. I don't know how the market played. It might have wicked down and hit that. However, I would have absolutely bought this one. I would add a limit order waiting down here on the push back up, and the trade that I would have been looking for, enter right here and exit exit at the EMA. That's it. One quick little scalp, one candle, 2 candles, ideally give you a 50 cent, $1 pop. That is all you need. Probably a lot of people held these, got chopped around, and ultimately over here sold for less because they didn't get the pop they were looking for. This is all we want as a scalper. And so that's it. That's how I would have traded that day. Nice, simple day, simple levels. And that's it. I trade my daily levels, couple hourly levels if I need them, and then we move on. Okay, so here's the next day. Yesterday, beautiful day. And then actually, I also had like a fib right here if we want to be technical. So beautiful day that we were breaking below an important level to me, selling down to here where, I guess since we're talking a little charting, here's my fibs. So the fibs that I've been trading are, well, that's a little bit off. Let's see. So the fibs that I've been trading are basically like this. And then so when we go into the daily chart and we go into yesterday, here's my fibs. And I posted this chart on TradeMore like 100 times yesterday. Pretty obvious where I'm a dip buyer. So that is what I did. And I did it first thing in the morning. Once I saw all these candles holding it, I don't remember where I entered. I entered somewhere around here. And then I exited at the 9 EMA because I'm buying calls on a strong sell off the open. But I felt comfortable knowing if I enter here, I'll take the hard stop. If we're selling under here, 40 cents, I'm going to lose half a delta. I'll be done 20 bucks a contract, at most, no big deal. I'll take that stop. But I like the risk. I think I did even trim one off at these highs, but this thing flew to the 9. So then I was out, no big deal. And then I started watching the market, and this is where something, I have to put it in because I trade it, and so it played a crucial role in my trade on this day. So I trade the opening range. The opening range was this. I knew that we had a range day, and then I had mentioned in my tab, big picture in the market. Yes, we're strong. Yes, we're pushing. I feel comfortable buying dips, but tomorrow, which is now today, is PPI. So expect range trading movement, So I missed, most of this move. I think I might have taken a little scalp when we did break this level upside, but I was out early. Not a trade that matters, quick little trade right there. So quick scalp here. Maybe one on the break of this level with the retest. I think I took that. And then the next thing I started watching was I'm biased. I expect a range day, And so I start watching this. We break out, we did break the pre-market high. We did break the opening range. Nice, nice buyer volume on it. That was instantly met with 100% seller volume. So I shorted this candle. Somewhere up here, knowing that my stop's right up here. New high a day, I'm clicking sell, and I'm out for 10 or 12 bucks, This is just to take a stab. And then I got stupidly lucky. And so I got this flush down, and again, pure luck, not skill, just lucked out on that trade. And then I sold somewhere right around here. And what I did was I instantly put another line on my chart. So this was, this little consolidation we had down in this area was all like interesting to me. It held interest to me. It was something I wanted to watch. And then I had a trend now. So I could draw a trend on the chart. So I get a trend on the chart. When you have a trend and you're in a range, you're in my favorite zone to trade in. So I watched all of this action form right here and knew we had a trend formed. And so I bought the dip on this candle. My stop was going to be a little wider than I wanted, but basically below these wicks, knowing we'll probably hit that trend. Maybe we'll bounce, but I don't want to eat that much risk. So I bought the pullback on this candle. Also kind of thinking I'm pretty close to the bottom of this little micro range. So maybe I'll get a bounce. 90% of the position was off right here at hourly 20, and the rest of the position was off somewhere right up here. And then I just started watching. We're at the top of the opening range, getting close to the top of the opening range. People are screaming buy calls on trade floor. So I did a little inverse trade floor action, knowing absolute worst case scenario, I'm risking 60 cents of upside for the new high of day. So took the short here, rode it straight back to this level. Well, at this point, we now have another trend, and the market just became easy. We're in cheat code mode now. We got a tightening trends in a ranging day. We buy all dips and we short all rips. And so that's what I did. When we gave up this trend, I was like, there's no way we're going to give up this trend. I was a buyer here. I was mostly out at VWAP, a couple of candles, even took the bounce to the hourly 20. Again, we push up to our level. We push up to our trend. I missed this short, made me sad. We dip down to trend an hourly 20. I'm buying calls here. So catch that bounce up. And that's it to VWAP. You aren't looking for much, you're looking for a trend bounce, and you get a trend bounce in one candle. So you take it out. Then around this time, people on trade floor are saying puts. So I comment to them, don't short it until the trend breaks, because they actually shorted it over here. So they were just hoping that they were making money over here. So I said, don't short it until the trend breaks. And then unfortunately was typing on trade floor rather than taking the breakdown retest of the hourly 20, of the EMA, of the trend, beautiful entry that likely never saw red. I, of course, didn't get it, with a scalp down to 532. About the point the bears start celebrating, I look left. I called it a double bottom. This was one that I did buy and just scalped it up to the hourly 20. And I think that was it for me on that day. So yesterday was a day, like it was a scalper's dream. I mean, there was even more entries you could have taken. The market was doing exactly what it should do in a range and just respecting those levels. So then at the end of the day, I removed these levels. That's what I do. That one was important to me, no longer important to me. And then we come into today. And so now we've seen a day where, last Friday, not the best scalping day. Monday, yesterday, like a scalper's absolute dream. And then we come into today. Um, Same situation that I've been explaining for my daily bias for all of that is, uh we if we're above our levels that we found on the daily, if we're above the VWAP, if we're above the hourly 20, our bias is simple. We're buying dips. I will say on the back of that data, it was a day where if you understood data, um, on the back of that data, you should have been in dip buy mode. I mean, that was really, really good inflation data, like much better than anybody expected. And so you should have been looking to buy these dips. And so that's what I came into the day doing. Again, we have our fib, we have our daily level, we've pushed above it, and yes, we've pulled back. And right about here is where I started looking to buy the dip. I mean, we're holding VWAP, we're well above hourly 20, we're holding our level. We have this fib overhead, so it is a little bit scary. And I think the first trade that I took on the day was somewhere, give me a second. Let's see. So 736. So apparently I bought this candle. Like right as this candle closed, I bought this candle. I honestly don't know what I was thinking that close to the fib, but probably just my bullish bias on the day. So kind of bad entry, but stop would have been below the 12, below the 20, below the VWAP. I mean, those are all perfectly reasonable buys. And then I wasn't targeting much. I was out here. I mean, I was out like right here, in 538 calls that I bought for $96 that went insane into the end of the day. But I was all out here because I'm a scalper and I want candles like that. 1, 2 candles. And of course, if you held all day, you made really good money today. But I don't like to hold all day. So the next trade I took was when we broke these highs. I started watching, we had candles breaking these highs, and then we finally had these two right here that, not the prettiest candles on the planet, but they both wicked like the 9 and above that level. They held above that level. So I got in there somewhere right around here. I got in there again looking for a quick scalp. And this one, I remember this one because I I I actually went out of the money, which I typically don't do. I went 540s. But so I went for some 540s because they were a little cheaper and I got a nice little pop. And then I started working with a buddy of mine, and so I just said, "Oh, I'm going to get out of the position." And so I exited the position. I set a stop, and then this candle stopped me out. No big deal. I made a couple of bucks on it, and then obviously the market rallied, and then again, the next trade that I took was this little sell-off around here, and then a hold of our level. We were at the 9 EMA. This is a bullish candle to me. So I liked that trade. I think I even ended up having to pay a little more than I wanted on that trade. And then, so I took it, and I took that trade and I scalped to these highs. And again, I was out of the trade. So just quick scalps. Then my very final trade of the day, was I was watching this trend form just on these, and then and again I got a super lucky trade under my belt. Even got it my buddy to, I think he hit it with me. I shorted this candle. And I shorted this candle because the trend was just down and I was just looking for a quick, like, I wanted a 20 EMA touch. That was all I wanted. I knew that I was up there pretty close to 541. And if I could flush it down close to 540, I would get a nice return on him. And just so I happened to have that Fed speaker say really bad news. And so, or well, not really bad news, really bad words that in the end nobody cared about. And then ultimately got out right here. So that was it for me on the day. And was it a good day for scalps? Was there a couple of scalps? Yeah, but let's be real. I mean, if I just held those 538s, that was all I needed. It was the one trade I needed for a day. So this is an example of a day where, I should have taken a step back, opened my eyes, looked at the trends, and just kind of walked away, not like actually walked away, but just said to myself, like, buyers are winning every single candle. There is no sellers showing up. There's no, we were never really given a reason to exit longs. But I just take those quick pops when they come. And, the market's not always going to go straight up. It is always going to pull back. It is always going to consolidate, and consolidation leads to big moves. And so, as scalpers, we're just trying to take advantage of those little pops in the consolidation at before or as those breakouts come. So for me, that's scalping. That's how I do it. I know it's probably a lot of information, but any questions, any concerns? Do you want to look at another chart? Is there something like, why did you buy that? Do you need more explanation? Let's have at it. Never. I never ever. No, I won't say that. But for trading, I never ever ever will turn on the 1 minute because there's no need. There's a time and a place for the 1 minute, absolutely, but it's mostly in the futures market is where you can actually capitalize on those short time frame things. But the moves are too small. I mean, on a 2 minute chart, you need more time. You need the candles to move more, And so like if you're a scalp should like I don't want to say should, but a scalp should take longer than 2 minutes, I bought, like I said, I bought it here. A 2 minute trade is just getting smoked. I'm not even like looking at the chart, Like I'm not even looking at the chart during those 2 minutes. I don't care what it's doing, I care what the candles do at the end. And so for me, waiting for those 5 minute closes has always been fine. However, the other time that I use the 1 minute is when I'm suspicious of somebody telling me about a trade. And so I'll pull up the option chart and then I'll look for the volume to see if they're telling me the truth or not. And so I use the 1 minute chart for some more detailed investigation, but personally, never, never trade on the 2 minute, just for me, for day trading, 5 and 15 minute, like the 2 minute futures traders, they are wild. I mean, they will take 50 trades in a day, but a lot like, and I love scalping, but even that for me is like too much. And on something like SPY, just to pull it back up, of course you can get like those bounces, but if you're trying to scalp 8 cent moves, 10 cent moves, you one likely can't be fast enough, and two, you're going to be making like $4 a contract. You're going to give away you're going to give a buck away on it, to commissions or whatever it is. And so it's not worth the headache and it's not worth the stress. I mean, and you guys all know I love Al Brooks. That guy has a video of him trading on the 30-second chart. And so like there is a time and a place, but just for me, I like the 5 minute, I like the 15 minute, and I like to trade my daily levels on those things because I don't need to trade all of this junk. I want to only trade this junk when it presents me an opportunity to catch the nice move quickly. Yeah, exactly. Nothing wrong with 50 trades in a day if you're profitable, but also if you're taking 50 trades in a day, you probably could have done the same thing with 10 slightly better planned trades. Because, less is more in trading. And like, man, if you're a futures trader and you're trading micros and you're trying to scalp like 2 or 3 points in like large positions, you're going to be paying thousands a day in commissions doing that. But yeah, use it. But also, that's just me. Like, use what works for you, And like, I always try to tell people that in my lectures. If you have a strategy that's working for you right now, and I tell you that I don't like the 2 minute, but your strategy works on the 2 minute, then keep using your strategy on the 2 minute. That's the wonderful thing about trading is everybody does it different. Like nobody trades the exact same way. And so, trade what works for you. And whether I like the 2 minute or don't like the 2 minute should not impact your trading. I will say if you like the 2 minute, but you're like always losing money on the 2 minute, then I might recommend changing it. But if it's working, let it keep working for sure. Do I like to scalp SPX? Absolutely not. Absolutely not. It's just not a good instrument for it, you know? There's no liquidity, spreads can get wide, and SPY will pay you the same amount. If you do the math, you'll realize that the returns are dollar for dollar very, very similar. I mean, SPY might pay you a little bit less, but that's likely because you had more contracts and got to trim the position to protect profits. What are my favorite indicators? You know, hands tied, if I had to pick two or three, I would likely go hourly 20 without a doubt, VWAP, and probably the 9 EMA. It's a great tool, you know. I might actually just go 5 minute 20 EMA, 20 or hourly 20 EMA and VWAP. The hourly is literally just the 20 EMA, but it's from the hourly chart. So if you look at my chart, I have this yellow stair-steppy thing. That is the hourly 20 EMA displayed on the 5 minute chart. And why it looks like that is because it only updates once an hour. So it's flat for an hour, and then you get the tick up or the tick down or whatever. Whereas if I go to the hourly chart, it's just a smooth line because these are hourly candles, so it's only updating on the hourly. And so for me, likely the hourly 20, the 5 minute 20, and VWAP. I mean, and then you give me support and resistance, and I'm off to the races. But honestly, I would just as happily trade with just support, resistance, and trends and no indicators as I would with indicators. They're just, you know, they can just give you a nice little like confirmation, you know. If I had to pick one, I would trade the hourly 20. If like I was, you know, hands tied, I get one indicator, it's the hourly 20 for sure. It just works really, really good. I mean, just like it, when you're trading in a range, it can be a great midpoint to change. When you break below it, it will oftentimes give a really nice retest to either short it, or if you break above it, no, that one didn't work. But if you break above it, you now have, you know, retest places to attempt to get long. If it's just going sideways, you know, the market is basically ranging. So it's just a very versatile tool. If it's just pointed up and to the right, you know, the trend is pretty strong up and has been for at least 20 hours straight. You know, 20 hours before this and 20 hours before this and 20 hours before this. I mean, the market is strong, you know. My favorite trades are really, you know, bounces and rejections on it. I'll try to just quick find a good example of it. So a trade this is a place where I would likely take a scalp. I would, because I'm going to assume it's not going to break. So I'd buy this close of this candle, looking for a pop up here to my level for a quick scalp. We break down here, I short the bounce to it, the retest of it, and stop over the 9 EMA. So two trades, 40 minutes apart, that both work really, really well. Those are some of my favorites. Some of the other favorites are, and I just, you know, I don't have any drawn up, so I have to cruise for them. Double tops and double bottoms at it are like just one of my absolute favorites. Of course, I'm not seeing any just quick ones. And not seeing any quick ones right now. But that might have one. And not quite. But if we see something like this pushing up to that hourly 20, I should just take all these others off so we can look at it. When I see this kind of thing and we're pushing up to the hourly 20, I'm short every single time. Like when we look like we aren't going to reclaim it, we're getting multiple tops in the area of it. That is or, you know, bottoms. It can work the same way. Like this kind of thing. We're holding it a whole bunch. New hour starts. I'm probably buying that first dip, looking for a scalp up. You could even call this one a double bottom here. Those are my favorite at it. Because generally when it breaks, you get a retest. So, and like, I know that's risky to say, and I'm not telling you to like hold, like, you know, like buy the first break of the hourly 20 or anything like that. But like, when the hourly 20 breaks and the market's letting that happen, that's really rolling over because as I said, you know, each one of these is taking the close of the 20 previous candles into account. So when you start looking back, like the bears have been winning. So frequently, if you get a break, you're going to get a pullback to it, or you're going to get a retest like this. Or if you break down and you buy back up, you're frequently going to get these kinds of retests in the area because that's basically the market giving up from the previous day, you know? So it's just very, very reactionary. And it's something that on the 5 minute, you can identify those double bottoms, triple bottoms, that kind of stuff. And it just kind of works over and over, and your stops are tight. Like even if you buy, like maybe you buy this candle on the way down and you say like you're buying blood and you'll stop out under the hourly 20. Well, you stop out for like a 10-cent loss, 10-cent equity move. So not very much. So if I just had to pick one, give me some support and resistance in hourly 20, and like we're above the hourly 20, I'm probably buying dips to the hourly 20. We're below it, I'm likely shorting rips to it, It frequently does a really, really good job. I use the EMA, hourly 20 EMA. And for a scalper, it's like it's wonderful, like even this one. Okay, you buy it, you're looking for the bounce, maybe you don't take your scalp out there, you get stopped just below it, and then you can look for a retest up to short it. And worst case, you're gonna get stopped just a little above it. Like it's not very common that you get just a blowout candle past it, like so if you are buying the dip to it, your stop's going to end up being relatively tight. Or if you're, shorting the rip up to it, I mean, even this one, you ended up, let's see, yeah, you ended up at what, 40 cents a risk on the trade. So a little more than you might want as a scalper, but you could even have the hard stop here and reduce that risk to 20 cents, So that's why I like it, because as all of you that come to my lectures have seen, I like low risk, high reward, simple trades. So things like break the hourly 20, come back and retest it. I'm probably in there. Even this one. This is one where it goes wrong, because you have to show those examples because it can go wrong. It's not just cheating, even though we call it the cheat code. You buy this dip to here, you got blown out, but you were also buying calls 5 minutes to close. So you kind of had to be prepared to be blown out. Yep, so 20 EMA. So when I add it, it's again just a custom script. And then on this thing, it's just the multi-time frame moving average. And if you click on the little settings deal over here, you can go in there and change the period to 20, and that's gonna do it. Can I show how I find the levels again? Not exactly, because that was what the whole lecture was on. But if I give you a very, very simple, so here is a chart. Oops. Uh, maybe it's this one. Uh, 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 I must have adjusted it. So here's a chart where I have only major daily levels. These kinds of things, big rejections where gaps happen, where bounces happen. I look for things like big old wicks like this, for places to hold it later. That's where most of my levels come from, big daily levels. So that's what I use. That's what I like to, those are what I like to trade around. Again, you need to be realistic with your price targets of like, don't expect a $10 rip. I know they're happening like every day right now, but that will stop, that will stop. So I like to look for these major bounce points, major rejections. That's what I like to do. We haven't had a slow market in years. We'll see, and that's a tricky question. We went through that. I highly recommend you go back and rewatch this lecture because we covered all of that. I covered this. Nice sideways market. Definitely like definitely one of the most valuable like and potentially profitable times to trade quickly is a ranging market. Don't get caught up in ranges suck. Um, Ranges a lot of the time will make you more than a trend day. So learn how to trade them. Okay, well, that's going to do it. Thank you so much, everybody. I really appreciate you being here. Was a fun lecture. I love talking price action. I love talking scalping. So that's what I like to do. Nice. Thank you. I'm happy you enjoyed it. Happy you enjoyed it. We even had like dang near 50 of us in here. That was fun. Awesome. Thank you all so much. Okay, you all have a great night and we will catch you tomorrow. Thank you.